Traders, good morning, good afternoon, good evening. How are you today? Please give me some okay that you can hear me. Loud and clear, wonderful. Thank you very much. So, how you guys doing? That was a beautiful week so far, providing several sexy opportunities as we have been hunting from Monday. And as we say, so far, so good. Also short term, also swing trading looks beautiful. I'm doing very good. Thank you, Michael. Thank you. It was a wonderful week. So from all the aspects, I say was like it's finished. No, it's not. But almost, right? Thursday, we already start the imagination of weekend. So that's where it comes from. All right, so let's begin, guys. And I see some new names today with us. So welcome to our family, guys. Quick one, when you see my screen, right? Go over the trading report. Okay, you have everything in the members area, and this is sent after the live room as well. Watch the video how this report is done. That's the list of the webinars that most recommended to watch to understand the language we speak here, and all the things we follow, all our techniques. And this is basically the table of the watch list, the things we discuss on the live room and we plan to trade. Okay, on the below you find the comments with a bit deeper explanation. What do we have on every single time frame? So you have the flow in front of your eyes. And please remember, the report is not a replacement to the live room. It's a summary. Not all that we can say and pronounce we can write. It's impossible. So it's very important. If you are able to do so, watch the live rooms so you have the best idea of what we are following, how and why. So let's start several updates on the ongoing positions that we have. Let me just put my epic pen here. Okay, have it. And this one is here. The first one is the euro dollar, a pair we are short on. Basically, that was our plan. We are holding the range. So we are aiming the bottom of it or maybe even lower, right? And on the 4-hour chart, that was our scenario we discussed, right? Two waves. We got the breakout, correct? And since then, weekly, daily, and 4-hour became bearish. We are into the sell position. Now, we do need to pay attention to this level for few reasons. First of all, it's pretty strong support area. The zone of 1350 down to 113. Second, we do have divergences developing there. Take a look. 4-hour chart, bullish hidden. Bollinger Band duplication, right? Since the breakout of the Bollinger Bands, the 4-hour chart, full duplication. And the 1-hour chart, take a look on this ride. Over than 20 candles ride. Surrounding all, add all these parts to the fact that this is a cycle by itself on the short term, and we have a bounce around the area, well, a fight around the area of 161.8. We have all the reasons to put some of the money in the pocket. So it's a great place and conditions for a partial cash out. And for the rest, we continue because the daily is not changing nothing. Daily remains bearish, weekly remains bearish. So yes, short term have some signs against us. We don't want to, since the entry was on the short term, we don't want to keep everything running under full risk. So management is a good idea, and I myself, in such situations, love to cash out partially and put some money in my pocket. You know my approach. Never leave never leave money to the market when you have the signs to do so. Okay, that's very smart because sometimes the market is random, goes like that, and then you find yourself, oh, why didn't I cash out? My approach, when you can manage and you have the chance to do it correctly with a good risk reward and everything, of course, do it. Never leave profits to the market and manage according to the time frames and the cycles you chose to trade and to enter. So this is for the euro dollar update, short term, good place for partials, cash outs, or any other management to be applied. And for the rest, we still have long-term direction downwards. So the next one on the list is also from the euro. This is the euro versus the pound. Our plan was and remains the same. Two waves corrections, right? Or bearish hidden and for sell. Now, the daily does provide a bearish hidden divergence here. It's almost ticking down. There is only one issue we might face with such bearish hidden divergence. This issue is coming from the 4-hour chart cycle. 4-hour chart became to be a cycle by itself. Okay, so basically we do have here the possibility for the euro pound to start and develop something like that. One more push and then the bigger move. Okay, or hold it as a range. One more push and sells. So it does not change any of our plans, and yes, sell should be the main direction to look to trade it for the longer terms due to the weekly, daily combo cycles, money flow. Okay, the 4-hour should use us as a possible setup, but we do need to keep in mind it might develop with a bit deeper correction, and we know the rule that when the move goes vertical, like it did here, right, almost vertical, straight line, then the correction many times goes uglier, longer, before the move happens again. So this is something to remember. It does not mean we're not looking for sales. Definitely yes. Just keep it in mind and manage accordingly when you see and if you see signs against you. If everything goes one way, of course, there is nothing to intervene, right? And nothing to manage. Just enjoy the move. But if you see it's ranging, developing the signs against you, remember the alternative picture and manage accordingly. Next one on the list, also coming from the euros, euro CAD. We are long-term sells here according to the monthly and the weekly cycles. Daily cycle, finally, if you remember on Monday we spoke about it, we are bearish until we get some reversal signs. We got here a visit around the 61.8. Didn't really reach the 61.8, but we have the 10% deviation acceptable. We do have here a bullish divergence, which ticked yesterday, right? And how do we know it ticked? Look at the MACD, changing to bullish slope, happened yesterday. And here we are, 4-hour chart. Each of the daily legs became to be a cycle by itself, right? The first one, double cycle or triple cycle, doesn't matter. And this one is a double cycle as well. Divergence in play, 20 candles, right? But most importantly, the turnaround principles applied. How? Since it's daily and 4-hour chart combo in the short term, the turnaround cycles applied, and I want to remind you, when we have what? False breaks and higher highs, right? After a fake breakout, which we have here, right? False breakout, we got ourselves the higher highs. Convergence. After that moment, this is a very possible reversal time. At that moment, we also got, look what, 1, 2, right? And then breakout. 3 higher highs, 3 higher lows. This is a sign of a possible reversal. Does that change anything of the higher time frame, weekly and monthly cycles? Of course not. Not at this stage. That just means that the daily cycle we have, the double cycle we just spoke about, could lead us into correction right now. And correction could happen in 2 waves, or correction could be any kind of a range. This should be our destination on the short term, right? So the first leg looks like happening. The second leg might go and develop. This is the first leg, which is a cycle by itself. The second leg is straight going, no signs against. So yes, very likely we would see some pullbacks just to go with continuation. Possible pullbacks to begin from somewhere from here, because a lot of stop losses are located in this area for all those traders who try to sell somewhere here or here or here, try to make some squeeze, a few pips after such a rally, the gamblers, right? So this is a place that we might see some pullbacks, which later should use us as a further short-term buy continuation. Will that change our long-term plan? Once again, no. Because daily is the cycle and divergence, 4-hour should be corrective. Once the 4-hour will complete the corrective, we are going to look sell again. Is that picture clear, guys? Is that explained clean enough, like the plan? Okay, so always remember, we work with the flow, we go through the time frames, we check the higher, we remember the higher, we value the short. If the short is short time frame, like here in that case, daily is against the weekly, we have to verify each of the daily legs by 4-hour chart. If we manage to do so, we have the possibility to trade a short term once they get assigned for us. Okay, perfect. So we are done with the euros. Now we also have the Euro-Oz and the Euro-Kiwi for the long term. They are irrelevant at this stage for one reason. Again, daily was against. So we require corrective cycle. That could be 2 waves or a range. It's still possibilities for both. Now, basically, the short term could be traded to the upside. Still like that. And that's one of the scenarios we discussed on Monday. But for the long term, once this becomes a corrective cycle, so holds the 2 waves or holds this range, we can, and that most likely will happen the next week or weeks, we would be back for sales. As for now, there is nothing specific to do, only short-term possible buys. I like it less, to be honest, because the weekly cycle is so obvious to the downside, and based on the daily lags, I would prefer my sell rallies. So that's just personal view. Now there is one new interesting one adding to the list. This is the euro versus the yen. I personally expect it to continue slightly lower due to here basically the developing possible cycle right here to 61.8 or anything like that. There is no divergence against us after the bearish hidden. Currently straight go. So for me, it's still under bearish pressure for the longer term. Weekly, also the first leg is a clear cycle. The second leg is developing a cycle. So that's why I expect a push here. There is no divergence in the ending part. The daily chart provided a correction with a bearish hidden divergence. 4-hour chart became a cycle with divergence and continuation. And most of the interesting things for me would be this level, because if we will break this level, we can start talking about reversals. sell reversals in that case. So for me, euro yen, by breaking the last important low, would be sell the rallies with invalidation here. That's for the euros. Pounds. Let's start with the pound versus the kiwi. Our plan so far, rock on. If you remember, our plan was to get the second leg down, right? Like this. With the divergence, we got it. Beautiful. And what do we do in that case? As always, we confirm, first of all, for trend continuation, trendline breakout, but mostly we go lower and we make sure that we have on each of the legs a cycle by itself, and we have it. Now, the divergence here was not too obvious and clear. It is a cycle by the structure. The divergence was not really clear here and obvious. That's why the 1 hour chart could not be really traded. The 4 hour chart does. We got a beautiful continuation after the false breakout. 3 straight higher highs, higher lows candles, pushing that, confirming here a turnaround. And again, nothing against. So on the higher time frame, so far so good. Bullish call continues. We remain bullish. Of course, our invalidation last low. Okay. Questions so far, guys? You can say again, it's Thursday, so we take less adventures, new adventures before the end of the week, following up our plans from the beginning of the week, updating, upgrading. That's the important thing. So euro yen so far is the new additional. Okay, next one, pound dollar. Now, pound dollar, you know my personal view. I am after long-term buys due to the weekly cycles. So we were requiring a corrective cycle, which is happening here. Not too clear, 2 candles rule in play here, but double wave retrace to the upside. 161.8. Where is my epic pen disappeared? Here. 161.8 level holds divergence in play. The best thing, of course, would be if we can strike through the trend line and then buy retraces. But generally speaking, we are now, due to the conditions here, are very good to start looking for further buys. Pay attention that this also develops as a bullish hidden divergence on the daily. So pound dollar has 2 possibilities from here. Possibility number 1, if we go through the trend line. Okay, we break through, buy retraces. Possibility number 2, we make one more low to develop here a clearer divergence with a moving average. This would become another fake breakout, and then same structure, higher highs, retrace, buys. This is our plan for the pound dollar. On Monday, I told you it's not clear. It definitely gets clearer right now that the cycle develops better. Divergence starts to come from daily and 4 hour chart. It starts to look good. So we should be ready for possible further continuation. Pound franc. Now this one has a bit more worries from my point of view, and I will explain. The daily is not a bullish hidden divergence yet, and also the 4 hour chart not too clear cycle. Now, yes, we have here a double cycle, which we can call and say it's here, right, with the divergence, and that would be correct, definitely. But what bothers me in that development is the fact that look at the pushes. Sudden push, 1 candle. Sudden push, 1 candle. Sudden push, 1 candle. The noise is random, less structured. I like it less normally because this is a representation of lack of structure in the money flow, or in other simple words, lack of strength or absolute control from the bigger money, the bigger guys. That's what makes me think that there is a good chance that this all becomes as as a possible structure of a reversal. So 1, 2, and then possible 3, deeper correction before further buys. So pound franc is one of those that I would not deal with as for now yet. I might be wrong, but the way it develops just simply doesn't make it clear and beautiful to re-enter. So for all those of you who have it running from here, this is where we became bullish, as you remember, false breakout and the bullish retrace. So for all those of you who have that going and running, I don't see any reason to change, to be honest. And I myself hold my part, not full part. I don't have cash out for one part now, looking to bring it back, and I don't find the reasons to bring it back yet. But I am holding my other part for the long term because the weekly cycle did not change. The way I personally see that, we are going to play something like that. I might be wrong, but I don't see any reason to cash out for the long term, and for the short term, there is simply not enough reasons to bring back the cashed out money or to join the train if you missed it. The pound franc remains only for the long term without any new ways to rejoin at this stage. So that's for the pound pairs that I trade. Pound yen, not too clear to me, I must admit. Pound kiwi I love a lot, as you know. That's the ones I trade. Of course, the euro pound, which we discussed before. Michael, for your answer about the swap free account, yes, I have one. But again, depends. If the pair pay me, I prefer to go with regular, which means in the bank directly. Roll over my positions there, get my passive income. Roll over, but if it's completely against, like for example, shorting Kiwi yen or shorting Kiwi franc, just for example, or dollar franc, right? That's best to be done not as a very long term because the rollover would be costly. It costs. Yeah, definitely. So let's continue. Pounds. Where is it? Aussie. Now, Aussie dollar, it was so beautiful, and it still is for the long term. It false braked it. It's a beautiful kicker. Bullish divergence came in play. Perfect. The only thing we had is daily becoming against the weekly and the monthly by making the two waves and by making the divergence. From that moment, we know we want to see what? We want to see corrective cycle. Corrective cycle could be two waves or a range. So this was the first place where it looked like a corrective cycle. Is that enough because we have a bullish hidden divergence? The answer is no. Why no? Because the daily is bearish divergence. So 4 hours should be not a continuing cycle with a bullish hidden divergence, because hidden divergence is a trend continuation sign. And we have daily against. So we need a corrective cycle, which would be two waves with ending divergence, regular or continuing, right? So we need the divergence to be here, or a range. That's why on Monday we discussed about that. I said, okay, let's wait here and let it get clearer. And the clearer is still developing. There is still no divergence at that place. So the Aussie dollar is still bullish for the long term. There is nothing to work with currently for long-term buys. Therefore, there is nothing to do on the short term. I would not trade against weekly and monthly, no. Therefore, because it's not ready, Aussie dollar is currently removed from our watch list simply because it does not have the corrective cycle ready and completed for us. Like we had with pound Kiwi, like we had with pound dollar, for example. Okay, so X removed. We will come back to that next week and see if it becomes ready for us. Next one on the list, Aussie versus the Kiwi. Now this one failed to hold this low, invalidated this low, so this idea of buys here failed. But look what happens. Monthly, weekly cycles and divergences still in same place and direction. Daily still bullish divergence with holding this massive supportive area. And the 4-hour chart, the waves, bullish divergence. So far, so good. Now here comes the trick. First of all, the trend line is broken. It looks perfect. But if it's the really double cycle on the 4-hour chart, 1-hour chart would be a complete cycle by itself on each of the legs, while the first one was, second was not. Therefore, we do want to use the 4-hour chart. We can't really trade on lower time frames yet. Yes, the trend line was broken, but on the same time, this is a structure of bearish hidden divergence. Wrong measurements. Bearish hidden divergence. The pair still refuses to break through these highs. This is a save from the market. Hold on, hold your horses. It looks perfect, but we do want to make an extra verification. Now, even if, think about it this way, even if this is a breakout and we say, okay, that looks like a trend change again to the upside, no problem. But then the 1-hour chart for us would have what? How do we verify a bullish trend, guys? We speak about it a lot. Higher highs, higher lows. How many highs we have here? One high, and now only second high. One low, which now only making the second low, right? So we can't really, here. So we can't really say we have even a triple highs, triple lows structure upside. We can't. Therefore, it's not a ready trend. And if it does make this high, then it also breaks the 4-hour chart high. And then look to buy. Make sense? So we do, again, we always want to verify in the momentum we are in. The 4-hour chart looks awesome, it really does, but it refuses to create higher highs yet. And that's where we should be a bit more careful, especially after the previous development. This double bottom never managed to break highs, and this double lows with divergence still doesn't make higher highs. That's a suspicious sign. We do want to verify that. Therefore, break, retracing buys. But this level has to be broken. And we're speaking about 105, 33, 34 approximately. Okay, makes sense, guys? So that's very important. Keep that in mind. Watch that. I will not add it to the list because it's end of the week, less relevant. Watch that. It might be great for the beginning of the next week. Of course, we'll discuss about it, but just have it in mind. Okay. Next, cat franc. This is a beautiful sugar. We have been waiting for this level. You remember we discussed about that after it erased stop losses and verified a cycle for us. Our plan was look for these short-term sales, right? This is the stop loss area we have been covering and talking about over and over again. It did that. It created a divergence for us. It verified each of the 4-hour charts to be cycled by, each of the daily legs to be cycled by itself on the 4-hour chart. We cannot ask for more. It was a complete sugar. So basically, what did we have here? Double false break, horizontal and trend line. From this moment, the break of the lows, we are bearish. Right? Once again, daily double cycle, 4-hour chart, each of the daily leg cycle by itself, false break of alternative trend lines, false break on the horizontal tops. We call that super setup. The risk is tiny, and boom, here we are, already over than 1-to-1 in the movement, and the target for such thing is the 38.2 of the previous cycle. It starts to show some potential bullish hidden divergence on the 4-hour chart. 1-hour chart still not verifying anything against. 1-to-1 risk reward. No need to cash out. Good place to risk free any possible trade you have. Right? And again, remember the approach. Never leave a possible profit to the market when you will have the chance to protect. And you do it when you get the signs against you. So that's for the cat franc. Again, short term bearish, long term according to the monthly and the weekly cycles combo, we would be after that. All right, that's for the cat franc. Next one on the list, New Zealandian CAD, another bomb we enjoyed from. That was our place, and as we discussed, we want the convergence. We got the convergence, right? So we had two false breaks here and here, lower lows, trendline breakout, retest, bearish hidden divergence. Can we ask for more? Never. 1-hour chart, two waves, divergence. Again, can we ask for more? No. That's what we call, guys, super setups. Super setups when all the time frames tell you the same story. As simple as that. Daily reached the supportive area, the same 38.2 that it was holding from here and having issue with. 38.2 zone. 4-hour chart does a bullish hidden divergence here. Again, we don't trade buys, but it's just signs we have. 1-hour chart had nothing against, so there is no reason to get out for the long term. Only partials cash out, not full cash out, and that was the ideal entry after the convergence. As we always say, pull back, or if you alternatively trade just sell limit after convergence, right? Because we also can sell limit after convergence. So this is the protection, and again, we have here a beautiful risk reward, classical setups for a partial cash out, and for the longer term, let the rest go. Weekly does not change the plan, daily does not change the plan, so the only thing that could happen here, we can continue move inside this range for a while before the next movement. We don't have a reason to cash out fully. We don't. So Kiwi CAD long term remains still sells plan. Dollar CAD. Now this was another beautiful run we had. Our weekly is still bearish. We are after the 50% of the weekly cycle, as you remember. The only issue we had was the daily. Once the daily became double cycle and 4-hour chart became cycle by itself on each of the legs, this was the place we said we can start to see corrections. Right? That was the plan. The daily is a cycle and bullish divergence, so 4-hour to be corrective. How 4-hour could look like? Two waves or a range. Do we have two waves as for now? No. Do we have a ranges for now? No. Do we have any reason to sell as for now? No. So we do expect some possible pullbacks, one more wave until the divergence would recreate itself and we would go and sell later. So the dollar CAD on the short term could be traded to the buy side. We talked about it, that if we have 3 sequent higher highs and higher lows, we are in a corrective cycle. As for now, you can see we have over than 20 candles, right? Divergence developing. Very beautiful zone here for stop losses range here and here. A lot of stop losses would be located for all those who try to sell early. The first area was here, already cleaned, possibly to clean this one. And we can expect some short-term retraces and then possible push again for further sell. So dollar CAD short term could push higher. Long term, we will wait for the corrective cycle to form and sell. And the dollar yen looks good on where is that? Here. On Monday, we talked about that we might see short-term retraces and buys. As we see, we got it. It blocked with a double top and bearish divergence. Therefore, the short-term buys become irrelevant anymore. Do we have a reason for a sell? Now let's ask ourselves the question. Do we have the main ABCD pattern breakout? No. Do we have any lower low structure to restart the bearish plan? No. So do we have any reason to be dealing with sells already? The answer is again no. So dollar yen on the short term is remaining now neutral and would become a sell once we start to create the structure of lower lows again. As far as it did not happen, there is no reason for us to deal with that. So dollar yen, no new setups on the short term at this stage. Only long-term plan remains the same, bearish, but we need a setup. We don't have this breakout, we don't have lower highs, lower lows, and we don't have any false breaks and lower lows to start and sell the rallies. Patience would be required a bit more with this pair. And once again, I want to remind you guys the principle of vertical move. After vertical moves, many times the corrections are much more annoying than any other normal times. All right. That's for dollar yen. Valera, hi. We talked about dollar, New Zealand and CAD. It's already covered. Just covered it before. Okay, so please re-watch the recording when it's uploaded. Let me make sure I didn't miss anything. So covered euro yen, discussed about that as a new pair. CAD yen. Oz Kiwi also showed you the follow list. CAD franc we covered. Kiwi franc is another one that we have on the list. Jordan talked about it. I know he also shared that his ideas there. Basically, so far so good. The 61.8 of this double top with the bearish divergence making the pressure. 4-hour charts holds the cycle by itself on this rally. We are heading towards the 70%, the 50% here at least. It also fits in with the 38.2 of the double cycle, and this is why this would be a classical area for a target. So that's pretty much it. That's where we are heading. Okay. Oh. For a second, I was worried about my chart gun. Okay. So Kiwi franc, our plan, bearish. Retraces could happen, and with a setup, we would be looking to sell them. Valera, for the previous question, the New Zealand CAD already explained. We already spoke about it. So please rewatch the recording once uploaded. Okay? I will not duplicate the explanation about the same instruments. That's all from the Forex part. Moving on, indices. And here we are. German DAX. Remember our expectations, guys? Short term. Willem, thank you very much. Well, you're very welcome. Happy weekend. Our plan after this cycle, correction. So 2 waves or a range. So far, both could be totally relevant. Our plan remains the same for the short term. Nasdaq might become very interesting again. We do have the new trend line as we wanted to see. It's broken, and very, very possibly we will start to create these lower lows. If we manage to get them, we manage to follow and trade them. Keep an eye. It looks good, interesting, and developing. Gold and silver, we were short-term bearish. Now we have double cycle and bullish divergence. No more sells at this stage. No new buys, as we don't yet have any new setups here. And another important fact, the correction might be too small, as after such cycle we could see that going to 38.2. So to make conclusion against the daily divergence after such a small pullback, as for now, too early. This could easily turn to be triple, double, one more push. So as for now, neutral. We got what we wanted. Against this divergence, we don't want to deal. If the 1 hour chart turns to be corrective, and that we'll know by next week, that this might be a beautiful triple double, which next week we will trade sell. As for today, we are neutral. Same with silver. 2 waves, bullish divergence, game over. How that will be from here, will that turn to be triple, double, and one more push? Very likely. At this stage, too early to decide, especially before weekend. So we postpone the decision for next week. As for today, they become neutral. Oil, we are bearish, and so far it's going pretty smooth. That was our plan here. So far developing pretty sexy. No signs against, so we are holding. Again, the ideal scenario, the ideal setup, we are heading towards 38.2 to 50. Why 38.2 to 50? Because this is a special cycle. So this is our zone, and this is the corrective cycle we can see developing. That could be in 2 waves, or that could be in a range. Both scenarios are completely still possible to be developed. We don't know how it will be developed. No, what am I pressing? We still remain bearish. That's pretty much it. Natural gas, the invest we had running broke even on the second part after one cash out. This one break even, gone and done. So nothing else or new to do. And this is what we have, guys, for today. So far, it's a wonderful week. A lot of beautiful technical developments, both short term and swing term. Many pairs do look like there is more to come on the next week or weeks, so we're looking forward. Any questions before we finish? How, Michael? Write me on Telegram, private or Skype, and we can talk about it. Oh, all right, you got me on this one. You got me on this one. All right, guys. So once again, thank you very much. Um, you know what? Allow me to share with you a wonderful feedback. I love to get feedbacks from you. You know that. Allow me to share feedback from Asser, one of the guys I really proud of. And look here, he made my day with this feedback to open a morning like that. Simply perfect. He made a switch, focusing on the short, focusing more on the longer term. I had to share it with you. You know, it makes me feel amazing, really, and I mean it. When I see you guys, my students and followers in the academy, getting the principles I'm talking about. I'm not saying they're the best, but this is the only thing I know to teach and to trade, and that's the only thing I know to do. So that's how I know to explain. And when one takes and applies my principles inside personal trading and personal comfort zone, and it starts to pay, um, basically, that's all. So keep working well, guys. Keep working clean, and keep making profits. Michael, so you doubled your account. So you were kidding before. Good. Double account sounds like bigger risks, but again, we can discuss about that in private chat. Guys, once again, thank you for being here. I wish you a wonderful weekend to come, and I'll see you. By the way, next week I'm traveling to my base, not base, due to my family commitments. I have to travel, and I would not be here for next week. Jordan will be with you guys next week. Schedule will be sent during the weekend. I will see you a week after. So happy week, guys. I'll see you later in the Telegram. Thanks for being here. Ciao for now.